We know autonomous vehicle technology is getting better. More vehicles are getting on the roads day by day, particularly led by Waymo. But what's going to be really interesting for investors over the next few years is going to be how this business model plays out. What's the right strategy that companies need to take? It's not just about having the most cars on the road. It's about how are you actually going to make money? What are you going to specialize in? How are you going to fend off competitors? So some recent news from Waymo about how they're going to expand into Miami is actually really important, not only to Waymo, which is owned primarily by Alphabet, but also to some other competitors like Uber and like Lyft. So I'm going to dig through exactly what we found out about this and how it looks like the industry may be playing out. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's look at Waymo going to Miami. This is the announcement on December 5th, yesterday as I'm recording. Waymo is going to Miami, but what's important about this one is not just that they're going to be launching in Miami in early 2025, it's that they have a new fleet partnership with Move. If you go down here, they're going to first collaborate with Move in Phoenix, where they're going to begin taking on management of the fleet operations, facilities, and charging infrastructure. And it is designed to maintain and enhance the clean, consistent experience that our riders have come to expect. So basically, Move is going to be doing the dirty work of actually operating vehicles on a day-to-day basis, making sure they're charged, making sure they're clean, making sure any maintenance that needs to happen gets done. The reason that this is interesting is this is a third party that Waymo is leaning on, when just a couple of months ago, it was Uber who was going to be doing this work in Austin and Atlanta. That's highlighted here. Uber will provide fleet management services, including vehicle cleaning, repair, and other general depot operations. And this is going to be an exclusive deal in Austin and Atlanta. They're not going to be working with other partners. They're also not going to be launching the Waymo One app in those cities. The only way you're going to be able to get a Waymo is going to be through Uber. Now, it was potentially logical that that partnership would just expand all over the country, potentially even all over the world, but it's clear that Waymo wants to explore how are these potential strategic relationships going to work out. Can we just have somebody else be a third party that's going to manage the vehicles? Do we need to work with an aggregator like an Uber who's going to actually not only do the service work, but also provide customers? Or do we want to build out that customer relationship ourselves? I think what ultimately makes the most sense, given the fact that you have a really good brand name with Waymo, is just build out that Waymo app that allows you to build that customer relationship directly. You don't have Uber sitting in the middle, and then you can have a third party do this work like cleaning and maintaining vehicles. This also comes on the heels of another partnership that Uber announced with Cruise. This is one of the other competitors in autonomous driving. Their vehicles will be back on the road in 2025, but they are going to be bringing Cruise vehicles to the Uber platform. They are not going to be outsourcing the customer interaction to Uber. So what Uber would love to do is have this direct relationship with the supply, with the autonomous vehicles themselves, and maintain that relationship with their customers, with the riders who are actually getting into vehicles. But if you're an autonomous vehicle company, you want to create that direct relationship with customers so you don't have Uber sitting in the middle, being the aggregator of your supply. This is going to be the strategic thing to watch playing out for all of these companies, because I think if Uber does have a bright future, they're going to have to figure out how are we going to get as many autonomous driving companies onto our platform as possible, basically push out the everyday drivers, and then still maintain all of the customers that you have using the Uber platform and not get them to move to something like the Cruise app or the Waymo app. So this is the strategic game that we're going to see playing out over the next 5 to 10 years. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So where's the potential here for investors? I think there's a few ways to play this, and especially as this plays out, we'll see who's in a stronger strategic position long term. But the one company that I'm invested in that I think has huge upside is actually General Motors. They're about an 80% owner of Cruise. The Cruise business is basically pure upside for investors. So you're not paying for a very expensive company like Tesla that doesn't have proven technology. You're paying for an auto business that is generating cash flow. You're only paying about 5 or 6 times earnings, and you get Cruise for free. So I think that's a great place to be. A little bit of a similar situation with Alphabet. You get Alphabet trading for about 22 times earnings, and you get Waymo for free. So you get the search business and YouTube, all that kind of stuff. And Waymo is just thrown in there. I think both of those companies will eventually be spun out and be their own private companies or publicly traded companies. But right now, that's the way that you can get exposure to basically the core technology and the companies that are trying to build their own platform. The two other companies in ride sharing that I'm going to be keeping an eye on are Uber. Talked about them earlier. They're maybe not in quite as good a position as I thought they might have been a few months ago, especially because this Waymo partnership is not moving along as quickly as Uber probably hoped it would. But the other one to keep an eye on is Lyft. Lyft has a market cap of just $6.4 billion. So they're a distant second place behind Uber when it comes to ride sharing. But that means that they can play around with different business models. They can be potentially a better partner for these autonomous driving companies. Now, neither Waymo or Cruise has announced a deal with Lyft yet, but I could see that being a potential way for them to move into the market. It's going to be a lot easier for them to basically go all in on autonomous vehicles and push away that driver infrastructure that they've had to try to change their business model. They've lost to Lyft in kind of the last paradigm, but can they own the next paradigm? They already have a huge user base, so they could aggregate that demand and be a huge boost for some of their partners in autonomous driving. The other company to keep an eye on is Mobileye. Mobileye is a company that's providing technology to other automakers. So there's going to be a time where you're just going to be able to buy a vehicle that has level 4 or level 5 autonomous driving features. That's going to be an expensive add-on, but that technology is likely going to come from a company like Mobileye. So you might be able to get a Volkswagen that's level 4 autonomous driving, similar capabilities to what a Waymo is today, and you can just plug it into the Lyft platform or the Uber platform. So those are 5 companies that I think are really well positioned in autonomous driving. This is moving extremely quickly. I think 2025 is going to be a year that's going to be a real tipping point. We've got about half dozen cities in the US where autonomous driving vehicles have become much more common. I think that's going to probably increase by 5x, maybe even 10x in 2025. Remember, Cruise going back on the road, they're going to be building on the Chevy Bolt platform, so they could be building tens of thousands of Cruise vehicles by the end of 2025. So the scale is really getting to be impressive in this industry, something that I think investors need to keep a close eye on. And Uber and Lyft are going to be interesting players in the market because they want to have a role in the future of autonomous driving. But if they're not only running the app and getting the customers, but also keeping vehicles charged and clean and doing maintenance, then I don't know what role they're going to play in the future, because those tech companies who are building vehicles want to have their own apps that customers are interacting with. So very interesting to watch out. Something I am going to be covering a lot here on Asymmetric Investing over the next couple of years. But let me know what you think the future of autonomous driving looks like in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.